All right, let's go Yankees, baby. I got my Yankees hat back on after last night's must-win win, which they did. They did win, and they're still in it. They're still alive. Now, I'm not going to get too excited because things could end tonight. All right, that was a must-win game last night. They did it, and I'm not even saying that the momentum has shifted. But if they win tonight, I will say that the momentum has shifted. And so this is a very, very important game. Okay? The Dodgers had the chance to close it out coming into New York. They started last night the same way they always started, with a lead in the first inning. The Yankees didn't panic. They stabilized themselves, and they came back with that Volpe grand slam, which was incredible. And so this was a great win, okay? I'm staying cautiously optimistic. They have to win tonight. They're going with their best pitcher, Garrett Cole. He was fantastic in the first game. It's too bad that Aaron Boone, the manager, pulled him out too early. But tonight's a big night. And if LA came here to close it out. LA came here to sweep. They had the sweep. They were up 3-0. They lost. Okay, we could say they can afford to lose a game. But if they lose tonight, then I will say the momentum has shifted. You know, it's interesting. There is a movie on Netflix right now called The Comeback documentary about the 2004 Boston Red Sox in the comeback against, they were in the American League Championship Series against the New York Yankees. They were down 3-0, okay? And they won 4 games straight, and they went on to win 4 games straight in the World Series. Never been done before. So it's interesting that this is running right now. We're seeing this maybe, who knows, play out in reality once again. Fingers crossed. But anyway, that's all I'm going to say. I don't want to jinx the Yanks, but I am wearing my hat. I hope that's not a jinx right there. All right, let's talk about what's going on. I want to do a little review, all right, because I think it's good at this point to do a review. If we go back prior to the Fed rate cut, like even months before the Fed rate cut, when it was already being priced in, and you know everybody was talking about the Fed was going to cut rates and blah blah blah. I said that once the Fed would start cutting rates, it would set in motion a chain of events of new conditions. I actually said that we would be coming into a period with completely different conditions than what we have seen over the past, 2 years, 2.5 years, whatever. And I said that once the Fed starts cutting interest rates, what we will start to see slowly, but it will build, would be a drop in interest income transfers. I've been out on the channel here talking about how we've had over $1 trillion in interest income transfers. That has been the number one factor in keeping the economy in a positive growth mode over the last, basically the last year and a half, the last 2 years. Okay, $1 trillion of interest income transfers. I mean, if you take that away, forget it. We would be in a deep, deep recession. As it is, I mean, we just got GDP today for the third quarter. It was 2.8%. That's actually down from the forecast. The Atlanta Fed, their GDP now, they had a forecast of 3.4%. I didn't think it was going to hit that. So it came in at 2.8%. So it's taken, look, 7 trillion of leading spending flows, 1.4 trillion of net government transfers to achieve a growth rate of 2.8%. And that wouldn't even be the case if it wasn't for that $1 trillion plus of interest income transfers. So That was the scenario I said that was going to happen. I said it was going to result in a slowdown in economic growth, which would then trigger the Fed to cut interest rates more, okay? Because remember, that's the monetarist orthodoxy. They believe that if growth is slowing down, that the tool they use is to cut interest rates, where we know all that does is remove those interest income transfers. Just like when inflation is going up, the tool they use is to raise interest rates, which all that does is it's like a fiscal stimulus. It increases interest income transfers, okay? So I said that growth was going to slow down. It would set in motion, a number of Fed rate cuts. And this would be a bullish, this would result in a bullish trend for treasuries, okay? So we had the one rate cut, and what happened? Treasuries have fallen, treasury prices have fallen, yields have backed up. When I do something on a macro level, let me just explain something. When I invest in stocks, I don't look at the price of a stock. Some people might say, let's say the price is, I don't know, you look at what? Nvidia, or you look at Meta. Meta is almost $600. That's Zuckerberg stock. That's the stock. That's the old Facebook. Some people might look at the nominal price. Oh, 600. It's too expensive. I don't look at that. I look at the valuation. The valuation tells me everything. If I want to be an investor in stocks, I have to think like I'm an investor in a business. And the business I want to that I want to invest in is a profitable business that has dominance in its market, in its industry, in its field. All right? And where basically I'm getting a share of the profits, even if it's a minuscule share. And I want to invest in a way where I'm not overpaying, where I get in at an attractive valuation, not necessarily price. There's a difference, okay? That's how I invest in individual stocks. When it comes to a macro trade, like when I'm talking about economics and I'm saying like, we're going to get rate cuts, inflation's going to come down, the economy is going to slow down, inflation's going to come down, the central bank, the Fed, is going to continue to cut interest rates because that's its orthodoxy, that's what it does, that's the policy response that it's going to go to. We know this. That's monetarism, and that's what it's based on. If it doesn't happen right away, I don't freak out. Like, if the conditions, first of all, the sequence of events, the conditions that I spelled out, that I say, these are the things that are going to happen. I said it months ago. They're happening. You have a drop already after one rate cut. We have a 13.6 billion drop in interest income transfers after just 5 weeks. I mean, that annualizes out to like 140 billion or something like that after one rate cut, okay? You had a slower than forecast third quarter GDP number at 2.8%. I mean, we used to do 2.8%. This economy used to do 2.8% when, net government transfers were like 250 billion annually. Now we're talking about 1.4 trillion annually, and we're only able to produce a 2.8% growth rate. I mean, it just shows you like it's taken a lot of energy. If you think about those transfers as like kinetic energy, some kind of energy to keep things running, right? Fuel. It's taken an enormous amount of energy, an enormous amount of fuel to keep it running at a very tepid rate. All right? And now that's starting to come down. So like, I don't look at the price. Yeah, bonds have fallen. My investment is not doing that great right now. I'll be honest. But I don't panic because the whole thing, the premise of the investment was based on these conditions that I laid out well before the process started. I said they're going to cut rates. It's going to reduce interest income transfers. It's going to slow economic growth. They're going to cut rates some more. That's exactly what is happening. Why would I get out? Because the price went down? Hey, Warren Buffett said, if you can't stomach, no, he said, any investor should be prepared to have a 50% drawdown in their investment, even, in a good investment. You should already have that mentality. If you're looking at price alone, if that is your criteria, you have no business to get involved in some kind of a macro fundamental trade. If price is your criteria, then I would suggest you get a chart, you lay it down on the table in the dining room, you draw lines on it, or you draw moving averages, or whatever you want to do, and go that way. Go 100% price. Because if price is freaking you out, but you got into something, presumably, ostensibly, on a macro outlook, and then you allow yourself to get spooked out by price, then you are doing nothing but self-sabotage. Then you have no plan. You have no, you don't know what you're doing, basically. You do not know what you are doing. You can't have one rationale for getting involved in something where, in fact, the rationale is actually playing out exactly as it was supposed to play out, and then you allow price to freak you out. That means you are overtrading, and by that I mean you are overextended, and if you are overextended, guess what? You are gambling. I'm not here. Look, I don't gamble. If I go to Vegas, which I don't even go anymore because I can't stand it. I hate Vegas. I like Nevada. I like the desert. I like hiking out in the desert, stuff like that. I don't go to Vegas. I think it's tacky. I think it's awful. I don't gamble, all right? If that's your thing, then go to Vegas and gamble. Like, why are you involved in quote-unquote investing when all you're doing is hoping for a certain price to pop up? I mean, it literally blows my mind when I think like people, yeah, they want to understand economics and they want to understand MMT. And they're presented with a scenario where the scenario is actually working out exactly as it was, laid out, intended. It's happening. And they're running from it. If that is not self-sabotage, if that is not, I don't know what else to call it. I mean, it's just, I look at behavior like that, and I am not at all shocked that people don't make money investing or trading. I am not, because you want to know something? I used to do the same thing in the early days of my career. I used to do the same, even in the middle days of my career, all right? I used to do the same exact thing. To screw yourself up by switching rationales because you don't have, I don't know, is it commitment? Is it a stick-to-itiveness? Is it a fear response? I think that's maybe what it is. It's anxiety. And this is why I always say to you guys, like, do something hard, okay? I mean, I do boxing. I'm not that young. I'm 67 years old. I do boxing. I spar every day with young guys, get punched in the face. I like, mountaineering. I've climbed a couple of 14ers in Colorado. I did some really, really long and grueling hikes. I always say, like, I wake up early in the morning, 4 o'clock in the morning. I go to the gym. I say, do something hard, because if this scares you, I mean, this is so like minuscule in the big picture in terms of what you should be afraid of. And especially in a situation where everything that was spelled out in advance is happening, and you allow yourself to freak out. I mean, think about that for a second. Like, what course are you on? What path are you on? That means, like, you have zero control over your emotions. You literally have a situation right now where things are exactly as they were explained to you. All right? It's like, let's say you get a new piece of equipment, a tool or something like that, an appliance. And the instructions say, when you turn this thing on, X, Y, Z is going to happen. And then you turn it on, and all of a sudden X, Y, Z is starting to happen, but it's not yet where you want it to be in terms of its functionality. So you freak out, you rip out the appliance, you take it down to the trash dump, and you get rid of it. That's literally what it is. Because, like, you don't have patience, you don't have discipline, you don't have control over your own emotions. That's literally what it is. How many times have I made videos, and if you can't learn from me, I mean, I've been in this business over 40 years, all right? I've been a member of 4 different exchanges. I made every freaking mistake in the book that you could possibly make. If you can't learn, and I'm very open with this shit, and my background and everything else like that, and the mistakes I made. If you can't learn from that, if you can't get something from that, and how many videos have I made about, discipline and resilience and like sticking to the plan, the process. I did videos on the process. It's about the process, not the price. They both start with a PR, but 2 completely different things, okay? 2 completely different things. It's the process, not the price. And that doesn't mean if you want to go with the price, then stick only to the price. If you feel like price gives you information about something, I don't know what, but you should stick only to the price, have some technical system where if it goes above that point, I'm going to buy. If it goes below that point, I'm going to sell. And that's it. You should confine it to that. Actually, that will work. But you're not going to make money because you're going to have the same lack of stick-to-itiveness. You're going to have the same lack of commitment. I'm telling you, I did that too. I did systems. All right? So, but if price is your thing, because you're going to if you get freaked out, you're going to get freaked out no matter what your approach is. You want something, I'll tell you what you want. You want something that somebody tells you, buy it here and sell it here. I have no brain. I want you to tell me, buy it here and sell it here. And if it doesn't do that right away, then you suck and you're no good. And it's time for me to move on. Sorry, but that's what it is. So if you're searching for that, you got a lot of friends out there, believe me. You got a lot of friends out there, believe me. I knew many, many great traders in my days coming up as a member of 4 different exchanges, okay? And all of them, they had one thing in common. They had that lack of fear, that resilience, okay? The discipline. They stuck to the process. Each of them had maybe their own individual process, but they stuck to the process. And when something was now changed within that process, some element, okay, they had to change. They had to either get out, they had to change their mind. But they never varied from their process. And that's the key, man. That's the key. If you get involved in something based on a rationale, until that rationale changes and you see evidence of that change, You don't jump out. You do not jump out. Okay? Anyway, that's it for today. Go Yankees. See you guys tomorrow. Please like and subscribe, and go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Bye.